Laura Hodges, MEPS International's US steel market consultant. Thanks for joining us again on the Speaking of Steel podcast's Marketing Minutes episode. We're going to be covering the US again, and hence we're calling on your services. We've got a month of the year now to reflect upon, and a month where an awful lot has happened in the market. So I wondered if you could just reflect a little bit on the changes that we've seen so far and the effect that they've had on
Well, I
prices.
mean, for the first month of 2025, it largely came in as it exited 2024. In terms of our prices, January prices were only slightly moved up or down in January for most products, but there were two noticeable exceptions to this. Hot rolled plate saw a $20 per short ton drop in January. And this was due to continued soft demand and ample supply. And it should be noted that this was the 12th consecutive monthly price decline for plate prices. And then there was wire rod. Wire rod actually jumped $50 per short ton in January. And due to tightening supply, Liberty Steel here in the US has idled two facilities over the last year. The first one in the first half in Georgetown, South Carolina. And then more recently, they decided to idle also their Pretoria, Illinois location. And so this has tightened supply in addition to, lower imports coming in from abroad. So, and then finally, I should also mention that scrap prices did increase $20 last month. And from what we're hearing, we are expecting more increases to come in February, which will, lend itself to the outlook that I'm sure we will talk about in a few minutes.
Yeah, there's certainly plenty to reflect upon this month. I think initially, though, at least we can perhaps reflect on the changes to the demand during January. You know, how has the year started? Traditionally, it can be a little bit quicker after the
Yeah,
holidays, but has that been the case?
again, I would say similar to prices, demand sort of entered as it exited. But I think more recently we have shown some signs of life. Yesterday, we got our January first of the year reading from the U.S. Purchasing Managers Index released by S&P Global, and it showed a reading of 52.1. Which is the first increase above 50 since June. And I should remind the audience that anything above 50 does signal an expansion for that sector. So good news there. It was led by a strong increase in business optimism. So it was the strongest in almost 3 years. And on an even more positive side, they reported on stronger output and new orders for the manufacturing sector in January. That said, I can't say that, steel demand is back, as I mentioned in the beginning. We really do need stronger auto production, construction spending to really point to a return of steel demand. But we did end the year on a somewhat positive note, looking at it from a sales perspective. So auto sales and new home sales ended on a very positive note in December. So our expectation is, of course, that sales will translate into stronger production as we move into 2025.
Of course, a lot of what our expectations rely upon for 2025 subject to this quite fluid situation with the US politically, economically at the moment. So can you
Absolutely.
unpick a little bit of that and just take us through the outlook
Yeah, absolutely.
for the year ahead?
The outlook ahead is positive. And a lot has to do with just different factors that have been brewing and coming into 2025. But certainly the new administration led by President Donald Trump, with lower regulations and should spur some stronger steel demand as we move into 2025. So from a steel price perspective, we are expecting steel prices to move higher in the first 6 months of this year. Just looking at HRC prices, we're looking at them to move up, increasing by about $200, almost $200 a short ton in the first 6 months. And that equates to around a 25 to 30% increase in the first half of this year. That said, we did have to pull back our steel price outlook slightly in the latest iteration of our forecast released just a week or two ago because of our higher for longer expectation on interest rates. As you know, the U.S. Federal Reserve cut interest rates 1% last year from a range to a range of around 4.25% to 4.5%. So that's where they sit right now. But because of our expectation or their expectation of inflation and labor market conditions, the Fed has been forced really to pause these cuts moving into 2025. And in fact, last month, at the end of January, they decided to pause. They did not lift or cut interest rates. And now our expectation is the rates are not going to be cut again until June. So that's quite a long period with leaving them at 4.25% to 4.5%. This, of course, did temper our demand outlook slightly for 2025.
So there's a projection of slight uptick in demand, but equally there are some downside risks and some very fluid situations ongoing, I guess, as well.
And I should mention also just our, the fact that, another piece of what we look at here when we're analyzing prices is, of course, supply. And so, we did have, last year, we had some new capacity coming online and more to come in this year and even next, with the most notable, addition over more recently has been the Big River Steel Project 2 by U.S. Steel in Arkansas. So they did produce their first coil in the fourth quarter, and they expect to ramp up production as we move into 2025. For 2025, really the product to watch is going to be rebar. We're expecting capacity to come online by the tunes of 1.5 million tons in 2020, well, at least the capacity, not production, from Nucor, CMC, and Hybar. So, that's something to watch. Of course, the stronger domestic outlook should be tempered a little bit by lower imports, due to our expected higher, or at least the threat of higher tariffs coming from the new administration.
Okay, we'll certainly be keeping a close eye on that, and I know you'll be analysing it throughout the course of the year, Laura. All of that coverage will feature in the International Steel Review. But thanks again for joining me, Laura, and giving us that insight into the US market. It's a fascinating time for you guys out there. Thanks a lot.